Good day, traders. I trust you're all well, and welcome to Live Trading Profits. Now, we are at the end of the month, almost, 3 days or 2.5 days to go, depending on your time zone. But today is Wednesday, month closes on Friday. You can expect a lot of dramatic price action towards the end of the month. And in particular, where the month is ending now. Month ends on Friday. And the usual stuff on a Friday is that the weekly traders come into play. So, that's why Friday is always interesting to look at, because you have, big traders coming in at the end of the week trying to influence things or taking profits, whatever they do. But also, besides just being the end of the week, it is also the end of the month and the end of the quarter. So things have to be influenced at the end of the quarter. Institutions, reserve banks, all sorts of forces are coming into play at the end of the quarter. And this quarter is on a Friday. So really expect a lot of drama, which means you have to be absolutely cautious in terms of where you put your stops, etc., the usual stuff at technical levels. Now, I just thought, because we are going to the end of the month and guys are actively trading, let's have a look at the monthly charts from a price action perspective and understand the forces that are controlling the market, so that you have these levels marked out, whatever time frame that you are trading. Hang Seng 50 monthly chart. If you have a look at it, if you absolutely had to do something on this chart, what would you be doing? Well, I would like to say the high probability decision you would be taking is to sell. Okay, I'm just clearing some things which should only be visible on the daily to make our charts cleaner. You'll be looking to sell on the Hang Seng 50. And why would you be looking to sell? Well, huge bear sell-off, all the way. You can just go back all the way to 2021. Look at last year, just huge bear sell-off right up to the end, when we had in the last few months bulls reversing, huge bull reversal. And we got into the beginning of the year right here. Bulls continuing the buying pressure. This level here is 20,000 level that I've marked. Then a bear inside candle. And the bear said, oh, fantastic. All we have is big bear breakout beneath all of these levels. Good sell-off. This is just a pullback in a bear trend. And that inside candle was a setup by the bears to continue to sell off. And guess what happened? Of course, you can see that in this particular month of March, the bears triggered the sale right here. So, if you were trading the monthly time frame, you would have, been triggered into the sell here. And your stop, there's a key technical level. We'll never put our stop here. Price action traders got to find the right place. If you get acceleration down, then you can tighten your stop. So that level there, the low of February, is an absolutely critical level going to the end of the month, because the bears want this candle to be a bear candle. Okay, so the bears want the market to sell off and close beneath the low of February. And if they do that, then, they have kept that sale that was triggered active. So that's, $500 is not a biggie on Hang Seng 50 if you trade it regularly. So that's the goal for the bears. So you can expect that the bears are going to be out in force, looking to close the market there. The least that they can do is force the month to end up as a doji. That creates uncertainty. That gives them the possibility of holding, this trend line here. So this trend line is simply connecting that lower high and that lower high and anchored to here. The bears are trying to create a channel. If the bears are strong, okay, they want to get down here And if they get down here, if this closes as a bear candle, the bears are going to get down here. Who knows? It might take a couple of months, or it might take a little bit longer in the year, but that becomes their goal, because then they want to break below here and get down to the all-time low. If the market comes down, it starts to sell off, obviously the news is going to say market is crashing and all of that stuff. So whatever the fundamental drivers become, that's a key level to watch. So keep that on your view when you go down to lower time frame chart. And if you go down to the daily chart, there is a low of February. That is not far when you have a look at it. Today could end up as a bear candle if the bears are strong, and all they need is follow through back into their channel. This is on the daily time frame, to convince the market that they can sell off. If today ends as a bear candle, we can expect a lot of selling to get beneath 20,000 and to get beneath this level. So keep that in mind. Have a quick look at gold, which we have spoken about before. But on the monthly time frame, what is dominating the market is this huge reversal by the bulls. Big bull breakout, reversing all of that selling and good follow through. And the bulls are seeing this candle here, which was last month, as simply a pullback. So they're saying, well, we want to go breakout pullback. We want to get up here, create a completely new high for gold, which is in the 2,100 level. Is it possible? Of course it's possible. I mean, you just have to have a look at the market. We got to the all-time high, bears sold off, created a double top. Now the bulls have another chance to get above this beautiful 2,000 level and get to that. It is possible. I mean, when we were down here, probably never thought to go and test 2,000 again, but the price action is the price action. So the key prices, the key levels that the market is going to watch is this high that we have here. I probably have it marked on the daily, but we're going to put it down again just so that you can make sure it's on your charts. So it's almost like a double top high of the year. The high of 2023, you've got almost a double top with that's January, February. And all the bulls need to do is close above that level. Then, everyone says, oh, bulls are strong, breakout, pullback, we're going to accelerate up. And the bulls are setting themselves up to get up there. If we go to the daily time frame, okay, so we kind of have, there is a high of February. I've double marked it. Let me take off the one that I put on the monthly. I had it here, and it should have been visualized on all instead of just the daily. So that level, which was until this month the high of 2023, the bulls only need to close the month above that, because if they do that, then going back to the monthly time frame, bulls are strong and they're setting themselves up to go a lot higher. What we have presently, potential converging triangle, is breakout mode. If you're doing anything in this market on a daily time frame, you're going to be looking to buy above here. You're going to decide where your stop should be, put the correct stop in, and if you have the capacity to do so, then just wait through and see if we break out above that. But the converging triangle breakout mode, if the bulls are controlling the candles to the end, favors the bulls to get up to the measured move levels. If you also look at since 9th of March, I mean, if we use a 10 EMA, which I do to indicate the strength of a trend, we haven't had a single day in a couple of weeks where the bears have closed beneath the EMA. Tested it, failed breakout. So everything is favoring the bulls. Going into the end of the month, all the bulls need to do is close above this previous high of February, the little double top here. But of course, they want more because they want to set themselves up to get up to the measured move all the way up there. So be wary of that. Strong bulls on gold. If you're looking to do anything, look to go long. UK 100, that's the other market. Interesting market, on the monthly time frame. If you just have a look at it, you're going to say, well, oh my goodness, what is happening? Well, have a look at where we were. Forget about what's happened so far. This is the high of 2022. That is the low of 2022. Right here is the midpoint of the whole range of last year. And as I say, the midpoint of a distinct range is absolutely critical, because if it comes down here, the bulls don't want the price to go beneath the midpoint of the previous year on a monthly time frame, because then that shows that the bears are taken over. And of course, if the bulls don't want the bears to do that, they're going to have to buy. So that buying in this month's candle is the bull saying, okay, the test of the 50% was sufficient. We got to demonstrate that we are strong, because if we don't and the market closes down here, then the next month, everyone is just going to go start to sell this. The bears, of course, would have wanted, to close beneath the midpoint. And if they're still going to do that, they've got a huge task to do that. But we are in a trading range. If we're in a trading range, all they want to make sure is that at the least, if they can't create a bear candle here, the candle must at least create uncertainty in the market. They've sold off after that breakout to this level, all-time high. They've sold off. All the bears need to do, which it looks like they have a high probability to do, is make sure we still close within the range of 2022. Okay, bulls broke out above it, had followed through, failed, huge reversals. So there's going to be a big fight. The bears just want to make sure we close beneath here. If for something dramatic happens, then all they want to do is make sure we close beneath the EMA. The EMA on this market is really not a big issue, because we're in a trading range. So kind of discount it until we are in a trend of sorts. Daryl, good point. Just get hold of James. Get hold of James or in the office. I've just put it in there. Good question, Barry. In case anyone else wants to find out about jumping onto my course, get hold of James. He's got all the details. And by the way, thanks, Daryl. If you subscribe before the end of the month, you're still getting at the old price. If you subscribe in the beginning of April, prices are increasing to reflect the value of it. Essentially, they're going to double. So you've got a couple of days to jump in on that. Okay, so that's what's happening here. Expect the bears to be defending the levels that they're presently at. If we go down to the daily, just tells you the story. Huge sell-off as far as the bears are concerned. They're saying this is a key lower high. We got to keep the market beneath this key lower high or this lower high. They don't want to get back above the high of 2022. So the bears are going to be out full force defending these levels on the UK 100. Finally, euro versus the yen. Trading range, sideways price action, but the market is going up. Why is it going up? Well, we had this dodgy outside candle. So, it is a breakout if you look at the body, and they're falling up with a channel. So bull breakout, and we are in a channel. The goal, whenever you see a doji, one bar doji, is you got to put a measured move in. There is a measured move. As far as the monthly traders are concerned, even though we are going up in a channel consistent with this one bar doji, the bulls want to get to that measured move. They have some problems ahead, which is high of 2022. So as far as this market is concerned, the objective of the bulls is to make sure that this month, to the best of their ability, closes as a bull candle. Even if it's a bull doji, perfectly fine if a bull doji is here. but they want to make sure the channel that they have created holds, which will give them the opportunity to break above that high and get to this level, which is consistent with that measured move. So that's just views on the higher time frame chart. So if you're trading into the end of the month, just bear that in mind. There is the euro yen, and you can see what the bulls are trying to do. They want to just keep going up and at least try and close somewhere within this high. Plenty of opportunities, but be wary. End of the month, end of the week, end of the quarter. There's some GDP news tomorrow from the US. All these forces can come to play. If you've banked your cash, don't trade. I'm spending this week reviewing my charts, refining my strategy, finding ways to extract more wealth from the market in preparation for April. I'm not trading because I've banked enough money. Not enough. It's never enough. I've banked good profits, and I don't want to give them away end of the month. All right, guys, thank you very much. And if you are in Wednesdays at the market, we will see you in 15 minutes time. Thank you all, and please do get hold of James. He will assist you. Bye-bye, guys. Take care. Marlon, thank you, buddy. Cheers. Take care. Bye-bye.